This under-owned, under-loved stock is up 23% in the last 1 week, and I think it is still in its early innings. It is number one on the Finvest scorecard in semiconductors. We'll discuss this today, but first, quick intro. I'm Molly. I used to be an investor at a $4 billion fund, and everything I learned in investing, I'm here to share with you to help you invest smarter. So if that's interesting, hit follow. Today, we're talking about Micron Technologies, ticker MU. Full disclosure, I have a small position in the stock and I'm up $1,000 on it. I plan to buy more. This isn't financial advice. Do your own research as you make a decision. Back to Micron. Micron designs and manufactures memory and storage chips. Over decades of investment, it has become one of the largest players globally, competing with the likes of Samsung and SK Hynix. Its revenue comes mainly from two products, DRAM and NAND flash. About 70% comes from DRAM, the fast and short-term memory your devices use while running, and the other 30% is NAND, the long-term storage in SSDs and USB drives. Both are critical for modern computing. These chips aren't niche. They're in PCs, smartphones, cars, data centers, and increasingly AI infrastructure. Micron is number 3 worldwide in DRAM and top 4 in NAND, and moving aggressively into one of the most exciting spaces in the market, high bandwidth memory or HBM. HBM is stacked vertically and placed close to the processor, allowing much faster data transfer with lower power use. That's crucial for AI, where modules need to move huge amounts of data very quickly. Micron's HBM3E is already sold out through 2025. Its new HBM4 is even more advanced, and management believes that market share could rise from 9 to 10% today to 20 to 25% by the end of next year, a big jump in a high-value segment. What sets Micron apart is its integrated device manufacturing model. Unlike fabless chip makers, it controls the full chain from development and wafer fabrication to packaging and testing. This means faster time to market, tighter cost control, and better yields. It is also committed to $100 billion in US investments over the next 20 years, aligning itself nicely with national policy incentives like the CHIPS Act. The main risk is that memory is a commodity. Prices swing with the cycle. When demand spikes, Micron thrives, but when the cycle turns, profits vanish. In 2022 and 2023, revenues fell by as much as 57% year over year for Micron. While Nvidia has 70% or so in gross margins, Micron's gross margins are much lower at 35%. It also faces competition in NAND from China. To reduce this volatility, Micron is focusing on AI-driven memory and industrial and automotive markets instead of just consumer electronics. With AI workloads scaling fast, every GPU and TPU needs more HBM. Since 2024, revenues have rebounded sharply and Micron has beaten earnings and sales estimates for multiple quarters in a row. Micron ranks number 1 on the Finvest scorecard, with its growth score being pulled up by its expected EPS growth rate. And despite lower gross margins, it has pretty decent operating margins of 23%. Its valuation is excellent, with the stock trading at 11 times priced earnings, reflecting the cyclical nature of the stock. So here's the takeaway. Micron isn't for everyone. It's not an all-weather stock, and you have to be comfortable with the ups and downs. But its growing role in AI, combined with its in-house manufacturing, makes it a very interesting story to watch. So what do you think about Micron? Let me know in comments below.